Indian markets do appear to be stalling out, don't they? And that's largely down to disappointing earnings and not a great deal of progress, perhaps, on US-India trade talks. How challenging, in your opinion, is the short-term market outlook?
I think, in our view, the market is going through a period of lull on back of 2-3 factors. One of them being last fiscal year, we had a fairly tight liquidity condition in India. The fiscal year ended March 2025. And as a consequence of that, we've seen credit growth actually in India come down dramatically over the last 12 to 16 months or so. Second, I think the trade-related and tariff-related uncertainty is certainly impacting some bit of decision-making and impacting, to a certain extent, global trade. And I think we are seeing some impact of that, negative impact of that, even in India. And third, I would say, we've seen a bit of weather-related disruption. Monsoon typically, which arrives late in June this year, has actually arrived early, a month earlier. So monsoon-related rainfall started end of May. As a consequence, the economic activity actually in the month of June, was fairly negatively impacted, because of this. So in our view, what you're seeing a bit of disappointment in terms of economic growth data that is coming out of India is a function of all these, 2 or 3 factors that I've listed.
Yes.
But having said that, in our view, these are all very transitory factors. For example, on the liquidity issue, Reserve Bank of India has actually taken fairly decisive measures in the last 3-4 months. So we've seen an aggressive monetary policy easing in the last 3 months, and coupled with, fairly aggressive even liquidity easing starting April 2025. And our expectation would be, that trade deal also should likely get announced, if not immediately, at least in the next few weeks. So our sense is, starting September and October, the GDP growth or the economic growth in India should sort of again, start to accelerate, and the stock market should sort of be in sync with that.
Peeyush, what's your take on the story so far as regards corporate earnings from India? Because it has been a mixed bag. And at the losing end of the ledger, IT services really disappointed, especially that TCS announcement that they were cutting 12,000 jobs. How are you approaching IT?
I think on the margins, we are cautious on IT as things stand today. I think they're facing a couple of headwinds. One being, as I mentioned, tariff-related uncertainty impacting a lot of corporates in United States, which is impacting their decision-making as it relates to technology spend. And secondly, I think you're seeing some bit of disruption from, greater adoption of AI, which is directly impacting, the business for IT services companies in India. So our view would be, a bit of caution, at least in the near term. As in when we start to see, interest rate cuts happen in United States, that typically is a good trigger for, technology spend in United States. So as in when there is further clarity on the same, I think, things should start to at least be more brighter than what it is, currently.
Can you say the same about the pharmaceutical sector, which is really at the sharp end of all the tariff uncertainty and growth concerns, especially in the North American markets? Or does it pay to be perhaps selectively contrarian with some names within that sector?
So within pharma, Shri, I think it's one of the cheapest parts of the market in India. But having said that, without really knowing the fine print of what the tariff, would be and how it would impact pharmaceutical, it'll be sort of fairly difficult to take a very decisive call on the pharmaceutical sector, currently. But within that, I think there are certainly some companies, who are likely going to show growth on back of their own efforts in terms of launching, new molecules, maybe getting into more innovative, pharma side of things. And certainly we'd be a little bit more bullish, towards very specific assets on the pharmaceutical side rather than being, avoiding the sector as a whole.
Peeyush, in terms of long-term favoured sector picks, you like the consumer story, you like online shopping, but earlier, about 5 days ago, Nestle India's numbers were disappointing, weren't they? 12% decline in first quarter profit. The markets did not like that. Is that telling us that perhaps not all is well underlying with the Indian consumer?
So I think, Shri, you have to look at it from the perspective of, what's happening in India in terms of buying habits. A lot of shopping from families is moving online in India. So you've seen the advent of e-commerce and quick commerce in India, and some of these companies are growing 140%, quarter on year on year. So what is happening is a lot of general trade, which used to be where, the mom and pop, stores which exist in India, a lot of that business is moving to online, through the quick commerce companies. And as a consequence, as this part of the channel is moving away from, mom and pop to online, you're seeing D2C brands, some of the newer brands find a new lease of life and become, a bigger challenger for the incumbents which existed in the staple space. Foods is one space we are seeing a lot of new companies, sort of come into the market and continue to do well. So I think Nestle's number that you referred to was more a reflection of the same. But I also suspect you're going to see more of that in the FMCG space, right? So companies, if they want to continue to be, growing fast, they need to be innovative. And to some extent, they need to be acquisitive, of some of these smaller D2C brands in India. So it's more a function of, channel shift, which is leading to the numbers that you're seeing. I personally don't think consumption per se is, that dire. And if anything, given the steps that the government has taken with the income tax cut earlier in the year, I would think you should start to see some bit of consumption improvement, as we move through the course of this year.